And I think a lot of clients think of estate planning as what happens after I die, right? Where's my money go? What do I pay in tax? All that kind of stuff. What goes to charity, et cetera. But the way we think about it is that it is part of the tax code. It's been around since the early 1900s, and it's really something that is going to be used as a mechanism to draw revenue for the government, right? And so I think the way that we look at estate tax is that right now the estate tax exemption, meaning the level that if you're over that, you're subject to it. If you're under it, it doesn't matter. So for anybody over that, it's $26 million and above for a married couple. So most people are like, oh, don't need to worry about that, right? The high net worth that do typically have addressed it in different ways, but there's many folks who don't necessarily realize that the estate tax exemption level could change. They could raise that or lower it, and the rate could change as well. So right now the estate tax rate is 40% of any money over that exemption, but that could be higher. So what we've seen is what we call legislative risk. It's come up on the ballot last several years, and each time, basically, right now we have a deficit in this country, and we need to basically inflate our way out of there or tax our way out of there, and that's what's kind of causing some problems. So taxes are definitely one area that are in the crosshair, and what's been proposed is to lower the exemption threshold so that more people are subject to estate tax, and then potentially to raise the rate as well. And so if that happens, many more people that have never even considered estate planning ever will be subject to it, and they will maybe have missed a window to do something about it that they have right now as an example, or they may just be subject to whatever constraints there are at the time to deal with it. And that's at a federal level. It comes at a state level too. Right now, there's a number of states that have state level estate taxes in place as well, and other states could bring that in play too. And so it's one of these areas that it's going after the wealth, right? And as the wealth sits there, those laws can change. And so while most people think of it as, oh, this will come into play when I die and after I pass, much of what happens at that point is actually done during your lifetime and based on the laws that prevail at the time. So right now there are high exemption levels, and you can gift a lot of assets out of your estate, and even smaller estates that may think that they're subject to estate tax at, lower levels than they would be today should consider doing some of those kinds of things. So there's just opportunity in the way that the code is right now to help make things better for the end of life planning, and many people don't necessarily see it as something they should be doing right now, especially when they're younger. So